Doing this is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world, options trading program. So we're going to go into video 2 of the secrets of support and resistance for options traders. First video, what we talked about is support, how to find support, what support meant. We also went to giving you some context of like what the market actually is and what you're actually getting when you're looking at these computer generated readouts of charts, what the data actually means and what is the actual underlying scenario going on. So if you haven't seen video 1, I would tell you to go ahead and watch video 1 because part of that builds into what you're going to learn in this video, which is video 2. This is going to be a really good video for people that are tired of having technical analysis be presented to them in a very complex and complicated way. So we like to start fundamentally, give you a good fundamental platform, and then you can build off of that and become more complex. But you really want to understand from a fundamental level what this means. So if you've been confused about technical analysis from a fundamental level, this is going to be a really good video for you. What we're talking about today is resistance. So what is resistance? What we're looking for resistance is that where do people feel like the price at that particular moment has topped out and they're willing to sell? So where do we have more selling, right? More selling pressure than buying demand. And a lot of times it's because people feel emotionally that I no longer want to pay this price, or I feel like this is a good price to sell the stock at, right? And that's what you want to look for. So what we do is when we look at the chart, we're looking for where did it get bought into and drove up demand because there were more people looking to buy than looking to sell. And then where did that turn around and flip? When you have more sellers than buyers, where people were looking to sell and get out of their position, or they were no longer emotionally ready to pay more for the position. So you can understand that a person may be willing to pay $15,000 for a car, but they may not be willing to pay $25,000 for the car. So they may buy the car 1 year for 15, right? And then when they realize that the car is a certain price point, their attitude is that I'll sell it. Or they may be willing to buy it 1 year at 15. And then the next time they got to go buy the car again, they're no longer willing to buy the car at that price. So what you're looking for is you're looking for a rejection of that new price on the chart. And what you, a lot of times that's going to be exemplified is by people selling. And the reason why we know it's selling is because the price is going down. If people just don't sell and just hold their shares, you're not going to get the same reaction. Because a lot of times if people don't sell and hold, buy and demand will push the price back up. If people are willing to sell and we get more sellers than buyers, we get a surplus of sellers in the market. A lot of times what you're going to see on the chart is the price is going to go down. So you want to understand the two. So what we're looking for on the chart, we talked about when I look for to start plotting out support and resistance, I normally look for 3 points on the chart. So we're at a 6-month chart now. So what I'm going to look for is where on these 3 points did I get it to where it got bought into and it kind of rejected. And so for this chart for Apple around the 120, looking at the 6-month time period, you see that it got bought into, it even gapped up, got around this 120 mark and it sold back off. Came back up around here, got around this 120 mark, consolidated a little bit around the 120 mark and it sold back off again. Then it came up here around this mark and we got a little bit of a sell-off. So I would say I got almost not 100%, but almost 3 points around this 120 mark. This could somewhat be one, but it was already falling down from here. Now I'm looking for 3 points to track it. You don't have to look for 3. You can look for 1 because I don't know what time interval you're looking at. So you can look at this point here at the around the 131 mark and you see how it sold off. So it got bought into really heavy and sold off around here 131 and it fell all the way down until we got to 106. So this is 1 point of resistance, but it's not the way I track it, where I normally look for at least 3 points. You may not look for 3 points, but what I want you to look for is that where on the chart was it bought into and it sold off. We see the same thing here. It was bought into, it sold off. It was bought in here, consolidated a little bit and sold off. And then it started buying up here, a little bit of a sell-off. It bought up again around this 134 mark and it sold off. So we have another point of resistance that we can track. Here and here are similar. So for Apple, going into the 6-month, it got around this 134 and it sold back off again. So this here is sold off really hard. This one here didn't sell off as hard because why? Apple was going into earnings. So people were more willing to either, one, not sell, or sell off somewhat to get out of their position, but people started buying into it as we started going into earnings. It got into earnings around 143 and it sold off again, right? So we got to understand is that over the past 6 months, several times Apple got around the mid 130s and it sold off, right? It came out of earnings, got around to the mid 140s and it sold off. And then where we at right now with Apple, it's around the mid 130s. Now we know historically the last 2 times Apple got around this mid 130s, it sold off. So what are we looking for? To see if it continues to sell off around this mid 130s. And then what we do is we now plot our support and then we try to determine, well, if it's sold off around the 130s, where do we think it's going to hit a support line and then either consolidate or come back up? And this all has to do with what does the market think Apple is worth at this particular time based on what is going on with Apple. Because I'm looking at a 6-month chart. I'm not looking at a daily chart. I'm not looking at a 30-minute chart. I'm not looking at a 15-minute chart. So what does the market believe that Apple is worth at this particular time based on what is going on in the market? And we see that Apple over the past 6 months got around the mid 130s and you saw a sell-off. So that's what we're going to look for now. We're in the mid 130s. Will it continue to sell off hard like it did here, or will we get a slight sell-off, get around the high 120s, the low 130s, right, and consolidate for another build up? So maybe there's another catalyst coming about Apple. I know we're a good probably 87, 85 days, maybe 70 something days to the next earnings report. So is Apple going to consolidate, waiting for the next catalyst or the next news event that's going to drive this back up, the next upgrade, or will it continue to fall back down to its historical support, or will it bounce off this 134 and go back up to this 145? But we saw it got rejected here pretty hard and it sold all the way back down. So it sold from this 143 all the way back down to this 131. This would have been a really good short because these were really 3 days. This would have been a good short right here. So we got to really understand that's what we're looking for in resistance. So we got another one we're going to look at. Let's look at Facebook. So one thing I know about Facebook is that just looking at it, a lot of gaps in this chart, like a lot, right? And what I mean is that it's opening and closing. There's a big difference between its opening and closing price day to day. So a lot of gaps in this chart. But what I'm saying with Facebook is that its resistance is around the mid 280s. So I see here mid 280s. I see here mid 280s. I also see here mid 280s. Now we have some points above that. So we have Facebook at one time getting to 300, right? Consolidating for a few days and then rejecting down really, really, really hard. And you'll see that a lot of times on the chart, a company will hit a brand new 52-week high and then it gets sold off really, really hard because a lot of people will exit and take profit because they're not emotionally ready to start paying that new price. So the price will get driven up into these new heights and it gets sold off really hard. That's why I tell people Tesla's an anomaly where it just keeps going up, up, and up. Most tickers are not going to trade like that. What you're going to get is some people call breathing, they call it inhaling and exhaling. So the stock is going to exhale, it's going to go up, it's going to inhale, it's going to sell off. It's going to exhale, it's going to go up, it's going to inhale, it's going to sell off, and it's going to go through those cycles over and over and over again. You're rarely going to get something like a Tesla where you're going to get this extended time period where it just keeps going up. That is a very unnatural trading pattern. So what we're seeing with Apple is that we have a resistance here around the 300 and it's sold off really, really hard all the way down. I'm sorry, Facebook. I didn't mean to say Apple. So we see this resistance here around this 300 and then it's sold off really hard. Let me get my graph together. Sold off really hard to this 248. Started to work its way back up. We saw it get into the mid 280s. Sold off. Some attractors as one resistance. We get this here, 290s, right? Sold off again, right? Worked its way back up to the mid 280s. It sold off again. Not as hard, right? But it did sell back off. Consolidated a little here, then it sold off really, really hard. This is, I think, when Zuckerberg and Tim Cook was going back and forth. Then we saw it building itself back up again and back into the 280s again, right? So we understand that over the past 6 months, it's bounced. It's one of its major resistance points has been the mid 280s. So what we're seeing is that it's sold off here from the mid 280s. And what we're looking to see is it going to work itself back up. If it pushes back to 280s, we may say, okay, we got another resistance, maybe at this 294, but it's really 294, 300, right? Or it's going to bounce back down again and then hit its historical support. And then what we'll be looking for is where on here is a historical support to where once it hits it, it bounces back up to try to find a new resistance point. And this is what I want you to understand is that you're looking for historically, where are people buying into it, where once it gets to a lower price, they're willing to buy more of the stock. So you're having more demand than sellers. And then where on the opposite side do you get more sellers than demand, where it starts to sell off. Now, I want you to understand something. The way I plot resistance doesn't have to be the way you plot resistance. So the goal is not to do it the way I do it. The goal is for you to do it to a point where you can understand it so you can trade off of it, not to imitate what I'm doing. That's not the goal of this particular exercise. So to me, this is a creative endeavor because you're charting what you're seeing. Me and you can look at the same chart and see something totally different. So this is one of the things that you got to worry about with technical analysis is that the goal is for you to get an understanding, not for you to mimic or repeat what somebody else is telling you. So what I'm trying to do is get you to understand the principles of resistance, what it really means from a principle or conceptual standpoint, and then have you now go with your own chart and start plotting out resistance and support based on how it makes sense to you so you can trade off of it and become profitable. This is not school where I have a book that has the right answers in it and then you got to give me back the right answers. That's not what this is. So I want you to really understand that. So what I want to encourage you to do now is now that you kind of understand what resistance is, what price resistance is, and it's really resistance to pay a new price. That's what price resistance is. Same way if you go to a grocery store and something that you've been historically buying for $1.50 is now $2.50, and you may say, you know what, I'm not going to buy it at that price. And you know what happens? If enough people go to that grocery store and they say, we're not going to buy it at that price, it won't get sold. Then what does that mean? We got to cut the price to sell it before it expires because we have more surplus than we have demand for this particular product. You got to understand that. So there's no difference between you going to the grocery store, which is a marketplace, and the actual market for a particular ticker, right? And you got to really understand that. So this type of behavior is going on all the time, which is why I know that you can be a successful trader because you're involved in trading activity all the time, whether you know it or not. And you're agreeing to pay for prices without trading. You're just agreeing to it because you're agreeing to it with your behavior because you've been taught not to think of it as a trade, but it is a trade. It's a trade. It's 100% a trade. So you're engaged in trading activity all the time, but it's not conscious because they don't really want you to understand that you are actually trading something for what you're getting. So this is going to be the video on resistance. Hope I wasn't too long-winded. Hope I was able to stay on point. Hope it didn't take a lot of your time. And I really hope that you can get value from it. If you know somebody else that can get value from it, share it out. This is David W. Williams, also known as Diamond Dave, and I will talk to you later.